This is Pranav Rao from Smartkarma, and I'm pleased to have with me Michael Causton to talk through his recent insight on ASICS, that's 7936JP. Michael, appreciate your time today on the 19th of March.
Thanks for having me on.
Great. ASICS has shown strong growth in recent quarters. In your eyes, what's contributed to that growth domestically in Japan?
So superficially, it looks like Japan's leading growth for ASICS in just the last year. So sales are up 34.7% in Japan, and that's after 22.5% the year before. So very impressive growth. And this compares to Europe, which is also very healthy, 25.9%, and China up almost 20%. North America much less, around 4%. But clearly Japan is leading that. So superficially, it looks like the Japanese consumer is really back into ASICS, right? But actually not so much, because the real growth there was actually from tourism, and it very specifically for one sub-brand of ASICS. So if you look at within the numbers, you could see that sports style Onitsuka Tiger made up a whopping great section of that in tourist numbers. So it's 47.2 billion was tax-free sales. And not every tourist in Japan, we know this from our research, not every tourist in Japan does go through the tax-free process. So it's actually higher than that. So it's probably 50% or so like that. But of that, it's 41.5 billion just came from Onitsuka Tiger alone. So in other words, 1/3 of Japan's sales came from tourists buying Onitsuka Tiger last year. And that was an 84% growth on the year before. So clearly something is going on with tourists, and it's a massive, massive increase. And what this means is that it emphasizes to us a kind of perennial problem we see with ASICS. While it's a brilliant brand, it's made huge strides in overcoming many of its traditional problems. Within Japan itself, there's been less movement, there's been less change from this kind of old style traditional distribution model they've had. And to give you an understanding of what's going on there is really just some backstories that for decades, ASICS didn't really invest in Japan. It invested in Europe, particularly also in North America and the Asian markets. But within Japan, it kind of stayed with its trusted and true kind of model of wholesaling. What this meant was that the company remained dependent on some quite suboptimal retailers for some of its displays, and didn't really work as well as it should do. The net result is that within Japan, there's been this kind of decimation of its market share by the big international brands. So especially during the 2000s and 2010s, Nike, Adidas, etc., cleaned up and took a lot of share from ASICS and others like Mizuno.
Got it.
And so this is the kind of situation where we're still seeing this weakness. Although Japan growth has been huge, it is tourists. It's been the main source of this growth, and this underlying weakness. We actually think this is good news, though, and I'll explain that if you're interested.
Yes, I am very keen. I think in your note, you kind of talk through some strategies the company's looking to implement to bolster performance in Japan outside of tourism. Maybe you could talk us through a couple of those strategies.
Yeah, great. So what ASICS is doing, it very much reminds us of what Goldwyn did. Goldwyn, as you know, has been a brand which had a huge growth period. When it changed from a wholesale dependent model, it's the primary licensee for the North Face, by the way, in Japan. And they moved from this wholesale-based model to direct-to-consumer model, investing very successfully in their own retail stores. And as a result, they had, you can see on the charts, but it's got 5-10 year excellent growth, both top line and bottom line. We think ASICS is about to enter this phase as well domestically. It's already done this internationally, but we think this is going to be what's going to happen going forward. So it's actually very good news. So what we can do is just break down these numbers and say it's just to show how this works in Japan. So they're investing heavily in retail stores at the moment, and you've seen some great new examples. It renovated its Ginza flagship last April. Opened a store in Canal City in Hakata, which is very impressive. Another great one in Osaka, which even has a running track going around the store. It's just very impressive for a city like Osaka, where space is a premium, to fit one of those in. It's been a very, very popular store. They've now got 31 directly operated stores, including outlets. And so this is a reasonable number. It's not up there with Goldwyn or with Adidas or Nike, but it's getting there. And so what we can see is this is really an improvement. And if you look at Onitsuka Tiger in particular, there's been quite a lot of investment in stores there. And there's been a big impact on their margins as well because of this. But in some areas, like sports stars like this sort of division where there's kind of lifestyle fashion sneakers ASICS produces, 70% of that is still wholesale. So The problem with that is, again, it's the not only is the retail margin taken away from them, but also the displays, the store merchandising is a bit old-fashioned. It's not very brand. It's not improving the brand equity much at all. In fact, sometimes it's negative. Whereas you compare us with Onitsuka Tiger, within Japan, 58% of sales now actually direct to retail and direct to consumer through their own retail and through e-commerce. So it's a big increase. We can see the upside of this. We can actually measure this because if you look at Onitsuka Tiger, they've actually increased their margin within Japan. 34%, which is already high. The operating margin is already 34%, up to 40% last year. So within 1 year, they increased from 34 to 40%, which is a phenomenal growth. And all that's because of this direct investment plus the tourist dividend. So, but it is because people are buying direct from their own stores, tourists as well as locals. So you can see you can measure the potential upside if Sportstyle gets its own stores. We're going to see a big uplift in the margin side, but also in sales because the brand equity for ASICS will just improve a lot more. So we're actually very positive, and we can see this as working because ASICS within Japan, ASICS Japan and ASICS International, different teams. ASICS Japan pretty high-bound and not very kind of retail savvy, but these days it's completely changed, and these new stores are excellent. So we're seeing very good upside on that. So we think that within Japan, the local customer is going to really engage more with ASICS going forward, as well as the fashion side on Onitsuka Tiger and also Sportstyle. So generally, that's a good thing. The question is, of course, what happens with the tourists?
Yep. Nice segue. I think everything you've described about ASICS in Japan is fairly positive, but we're speaking in fairly turbulent times, and there's geopolitics about. Talk to me about kind of the risk from Chinese tourists traveling to Japan, or just the general Persian Gulf conflict at the minute.
Yeah, so we can measure this quite precisely in the sense that there's a good side and a bad side to this. The bad side is that Chinese tourism, of course, is way down because of the political strife between Japan and China. But on the other hand, tourist numbers continue to rise. Question mark now because of this Iran episode. So we're not sure going forward, but things are reasonably constant. If you look over a sort of 5-year time frame, there might be a temporary blip. But looking just at the Chinese tourist problem, it is very true that Chinese spend more than other nationalities when they're in Japan. So this potentially is a net negative for ASICS. If you look at department store sales, you can see they're down by 20% on the tax-free side. And our research shows that, for example, last year, Chinese spent an average of about 120,000 yen on a trip to Japan on shopping, just on merchandise, right? So it's quite a significant number. But this is double Europeans and Americans, and about 30% more than even the Hong Kong Chinese. So a very, very significant number from mainland China. So it sounds like a big negative because Chinese are obviously big spenders on shopping compared to other nationalities, and we don't know how much how the percentage exactly of Chinese customers who are Chinese in Onitsuka Tiger stores, but it's a significant number. Good news though is because Onitsuka Tiger and ASICS is not a luxury brand, and we also know from research, both from the company itself but also from research outside, that the kind of people who are keen on ASICS as a brand cover all nationalities. It's not Chinese specific. It's not a luxury brand. They're not buying into like a department store where the weakness is that it's primarily Chinese driving expensive bags and accessories, cosmetics. This is a different kind of product. It's much more of a lifestyle item, much more accessible pricing. And as I said, the nationality scope is very broad ranging. And there's going to be 40, if things get continued, there will be 40 million tourists in Japan, covering all sorts of different nationalities. Some of whom have never bought on its Tiger brand, but they brought into the brand, but they want to. So the potential is still there to grow the tourist base, in our opinion. There might be over the next 6 months, we just don't know. It's impossible to read, right? But generally speaking, I think there's so many tourists in Japan that there's still plenty of other tourists for ASICS to lure into their stores to cover the loss of Chinese tourists and everyone else. So generally speaking, I'm not that concerned. As I said, there might be some little bit of variability in the sales performance over the next few months. Be aware of that. But for anyone looking at the ASICS brand for a sort of longer term investment, I think it's looking quite assured. All the things they're doing, investing in those stores, it all speaks to a significant uplift going forward.
Got it. Thanks for the call today, Michael. And listeners, check out Michael's coverage of Japan consumer names on Smartkarma and tune into our next Smart Call. Thank you.
Thank you.